CMAP does not teach you how the mortgage journey actually works. Okay, it teaches you all of the theory and stuff, but realistically, if you're a new mortgage broker coming into this space and you're thinking, how does this process even work for you, and is this something I want to do, that's what we're going to unpack in this video, all the way from when the inquiry first comes in through to completion. What are the big milestones that you have to actually follow and do in order to be successful as a broker, the actual customer journey? That's going to unpack. So the first thing we need to look at was when the inquiry comes in, the customer inquiry. And the customer inquiry is going to come from a number of ways. It's going to come from most likely either a referral. So it's going to come from an estate agent, like an introducer or something. It could come from your website. It could come from your social media. It could come from a range of areas. But that is where your client inquiry is going to come in. Now, when it comes in, ideally, it wants to come through what we call a booking link, which can then do a pre-qualification. It's like a mini fact find to understand exactly what the client is doing. Are there time wasters like tire kickers, or are they actually legit? That's what happens in this client inquiry. Some people take phone calls. I highly advise against that. Realistically, you're trying to get them to what we call the discovery call, and the discovery call is that next stage. So the next stage is what I call the discovery call, but it is also known very much in the industry, and what it actually is called a fact find. So a fact find. The point of a fact find is literally to do that. It is to find facts. What a shock. Okay. That's actually the goal of it. Now, the fact find process is a point where you have to go through and learn the customer situation. What is their income? What is their outgoings? What is their deposit? What is their credit and financial previous history? All of these things are absolutely paramount when it comes to actually getting a mortgage. You need to know this information. And so that is a fact find stage. Now, this stage is normally going to take around 1 hour normally to do it. So it's going to take you about 1 hour. And ideally with these, they should be on Zoom. They should be either face-to-face. So they should be face-to-face. But really, in an ideal world, no phone. Okay, so it's no phone call. That is the ideal world of this. It's not what is happened, but best practices, that's what you should be doing. And then the point of this kind of fact find is effectively, I call it a discovery call, because that's what it really is in the sales setting, which is learning if it's a good fit to work with each other properly. So you have that inquiry comes in, which is pre-qualification. You have the fact find, which is what I would call discovery calls. If you see it in my content, that's what that means. And there's learning the situation, what it is actually going on. From there, it then moves into the next stage, which is sourcing. So sourcing is once the client has actually decided they want to work with you, they want to go ahead, all the information you gather from the fact find, and you're going to go and do the research to find out if it is actually possible to get the mortgage and then find the products for them. Now, the great thing about sourcing is there are a number of things you should be sourcing at once. You're going to be sourcing the lender, which is going to be the mortgage itself. So you're going to do the lender, you're going to source the product, and you should then also be sourcing the insurance, which will be the provider of insurance, and the product of the insurance. So this would be the insurance and this would be the mortgage, okay? And these are the two things that during the sourcing process, this is what you're going to be looking at. You're going to be looking at the insurances, and you're going to be looking at the mortgages, and you're going to be choosing the lender and the product and the provider and the product for each one of these. This is actually a bit that a lot of people get overwhelmed by because it is knowledge, but there's loads of tools and BDMs who are business development managers out there to help you and guide you through this process if you are not sure what to do and how to work it is. There's always people out there. What I would avoid, by the way, is on these within this is just avoid Facebook groups, okay? And the reason being is the Facebook groups, when you're doing this, is just pure toxic. The Facebook groups are not designed for you to go in there and ask criteria questions. They say they are, but people just slay you in there. It's really, honestly, I don't get why they do it like that. It's a bloody nightmare in my opinion. I really wish people wouldn't, but it is awful. It is brutal. So yeah, don't do that, in my opinion. Honestly, not a good idea. Now, once the mortgage has been decided and you know the products you're going for, you then move into the application phase. So the application is applying for the mortgage. Now, this is the bit where you're going to your case needs to be done correctly. Now, with the case being correctly, you're actually going to do what that means that your fact find. So you have your fact find, which you also have what we call your FMA, which is your full mortgage application. And you also have all of the documents. So when the application goes ahead, these three, they all need to match. All three of them need to match. So this is important. Your application phase is that you're going to apply to the lender and everything needs to match. And that's important from a compliance perspective as well. So you need to know that your fact find, your FMA, which is full mortgage application, and your documents all have to match and all have to correspond. That really is the most important bit of the application. What you'll do as well at the point of application is you should, in an ideal world, you should be applying for the mortgage and you should be applying for the insurance at the same time. Sometimes in the industry, a lot of the times actually common practice is to split them. Don't do this. If you are a new advisor coming into here, one of the biggest things I'm trying to do by making this content is to eradicate that bad practices. And one of the biggest bad practices is that it is an absolute nightmare. Bad practice beyond belief. So do not, in my opinion, do not get sucked into that. Make sure you submit the mortgage and the insurances, everything goes at the same time. You'll make a lot more money, the client will have a better outcome, and your life will be so much easier. Which then brings us on to the next bit, which is underwriting. Now, underwriting is where it has gone to the lender and the lender decides if it's yes or no. That's effectively what that is. And during this time, you might need to go back and forth with the lender. You might need to get some more documents from the client. This is where it's a hard one because it's saying, but averagely, to get a mortgage through underwriting until it reaches offer, it's normally going to be around, I see it's about 10 days is what I would say is about average. Now that, is going to be to offer. It's going to be to offer. Okay. Now that amount of time, I'm going to be really honest with you, that 10 days, that has been picked because of just me working with lots of brokers and being an advisor myself where it averagely is. Right now when recording this, some lenders, because I'm recording this during all the crazy rate rises, some lenders are literally not even looking at cases for 30 days. So it's not 10 days to offer, but when everything is working smoothly, you're looking at 7 to 10 days. If you have done the job well and the lender's moving fast, it's actually really fast and it's quite quick. And so that's the bit with the application. The insurance bit though is a little bit different because with the insurance, you do actually have they have to sometimes run a medical. So a medical might have to be done, and that can anywhere. In some cases, that can take anywhere 3 to 5 months. I've seen that happen with the medicals, if that's the case. But ideally, what we actually want is the mortgage, the protection should all kind of come around the same time, and they should all be offered at the same time. Ideally, okay, that's the idea we're looking for, is the mortgage and protection to all be offered at the same time. If that doesn't always happen, don't worry. That's the whole point of our job, is that it all kind of moves and goes a bit strange. So it's absolutely fine that if it doesn't do that way, it's not a big deal. So that brings us to your offer. The offer stage is actually an interesting one because the offer is that the mortgage now has been offered by the lender. It has been granted. They've said, yes, I'm happy to do it. And, we accept the terms subject to, to it being completed, meaning that this is important. It can be withdrawn still. So even during the offer, you need to make sure your clients are clear that they know, don't go and take out any finances. Don't do anything, because you may have to be rechecked or rescored or whatever. And if that happens, then the lender reserves the right to remove you from the panel, and we remove you the offer, and you don't want that. But the offer is where it's effectively been offered and it's all happy to go. Offers normally going to last for around 6 months. Okay, so 6 months is where offers will normally last, and then they have to then be renewed, so they can expire in the 6 months. This is actually more common than you would think, that they do happen and they do become they do expire, because when it takes a long time, that's pretty common with the offers. So that's something to bear in mind when it comes to the mortgage offer. Now, what will also happen with the mortgage offer is this is time for reviews. Okay, so reviews is where you would normally ask. So you should be asking for your Google reviews, your Facebook, well, to be honest, you should just be asking for Google reviews. You shouldn't be asking for anything other than that. So point of offer is where reviews should be asked, not later down the line. And also, by the way, what shouldn't happen is your insurance should not be put here. So like I said before, Most people do this a thing where they go, we'll do the insurance once we've done the mortgage offer. No, it should be now. Insurance and everything should be live by this point, right? In an ideal world, they should all be on risk. Income should be protected by now. It should all be in place, which is the best way to do it. Which then brings us on to the last bit, which is the completion, which is when it actually moves in. Now, when they move in, this is when the mortgage actually goes live. So there's a couple of things you need to be aware of. The completion is that the completion, this is where you should ask them for a referral. So you should be asking for a referral at the point of completion, because the process is finished and it's ended. What you should also be doing is telling them that you'll be in contact. So you'll be in contact 6 months before. Okay, so you'll be in contact 6 months before their fixed rate deal finishes. And the reason you're doing this is because that's when you'll remortgage them again to their new product, because the deal is going to end. But you don't tell them that until later, till this point. So that's what's going to happen here. And at that point then, by the way, it's done. And normally you will then be paid your commission about a month after they've completed. So that's the whole mortgage journey explained for you. That's the mortgage process of what you would have to do as an advisor. And there's so many in-depth, nitty-gritty bits about what you can and can't do and how to make it successful and all this type of stuff. Now, your first year as a mortgage advisor is probably the hardest of any, because one, you're learning that process, and then there's all these other moving parts you have to learn. And so if you want to know how you can not just survive, but thrive in your first year as a mortgage advisor, check out this deep dive video I made all about the skills and tricks that I wish I knew when I first started out. Give it a click.